Government has increased interest rates on certain small savings schemes. Now, according to a circular issued by the Finance Ministry, the interest rates of three small savings schemes, namely Senior Citizen Savings Scheme, Post Office Time Deposit, Kisan, Vikas, Patra, have been hiked by 10 bps to 30 bps. And to explain all of this, now we are joined by Anant Ladha, founder Invest Archfocal, and Amit Kukreja, founder of Amit Kukreja Advisory. Welcome both of you. But before we slip into this discussion, Anant, I want you to help our viewers understand the impact of the interest rate hikes. Now, for a person who already has a home loan or any sort of loan right now, how will this 50 bps impact them?
See, basically, since April 2022, RBI has increased their repo rate by 140 bips. Sure. And if we roughly calculate increase in home rate interest rate, it has been roughly around 80 bips. What I'm trying to say is, out of the total amount of increase which has happened by RBI, almost 50% has been directly transferred to the customers. Keeping that in mind, this time also we have seen 50 bips of interest rate hikes. So probably home loan interest rate might increase somewhere around 25 to 30 bips for all the customers. If we try and calculate it in amount terms, for a home loan of 50 lakh, tenure of 20 years, roughly 1,000 to 1,500 rupees per month EMI can increase if bank decide to transfer the burden onto the customers.
Which they will definitely. But then, Anant, what about the new borrowers? If someone wants to really go for a home loan right now, should they really take the plunge or just wait for some time, and the wait could be really long? What do you say?
I personally feel that wait could be actually very long. And right now, property as an asset class is in a sweet spot. Property has not given good returns in last 10 to 15 years. So if there is an property investment opportunity, or if you want to buy a home and want to take a home loan, especially when you know that you get a deduction of interest paid in income tax, it can be a good move to take a loan.
Amit, what do you have to say? How do you really figure out this increased EMI amount now, talking about your budgeting? How can one ensure that it doesn't impact much on their pocket?
Well, I have a first-hand experience of seeing education go up by 1% between the time I signed up for the loan and by the time I was ready for disbursement. And I see that we all have to pad up our expenses. We all have to be a little bit of proactive in terms of keeping some margin when the loan disbursement happens. So don't go very tight on your budget. Don't go very tight on your monthly cash flows. Have some good, 5 to 10% of room in your monthly outflow so that any such increments in the EMI due to increase in the home loan interest rate or education loan interest rate, it can be accommodated.
All right, so this is the impact of the rate hike on your loan portfolio, and as explained by Anant and Amit, you really need to pad up your expenses and especially take care of your investments. Let it not eat up your investment amount. Going forward, let's talk about small savings schemes, where Amit's Senior Citizen Savings Scheme now has been raised by 20 bps, which comes to 7.6%. Post Office Time Deposit 3 years raised by 30 bps, comes to 5.8% now. Post Office Time Deposit for 2 years raised by 20 bps, comes to 5.7%. Kisan Vikas Patra raised by 10 bps, now it comes to 7%. How do you look at this, Amit? This was already expected, definitely. After 4 years, finally we are seeing this small savings scheme interest rate going up. Should we really wait for more increment on these lines, more rate hikes on these lines, or should we just park in if at all one wants to have a conservative approach?
See, it's a good news always, Kavita. Sure. Whenever the interest rates go up, if you are not a home loan or any kind of a loan borrower, if you are just an investor, any hike in the interest rate leads you to have a better cash flows in your system. So it's a good news, in my opinion. And I would say that the fact that senior citizen scheme has gone up by 20 bips, and the fact that we have additional 20 to 30 bips on the on the post office schemes, it is going to create more money in the hands of the investors. And if the interest rates are going up further due to an increase in the inflation, it's going to create additional cash flow in the hands of the investors or the depositors. The question is, should we park now or should we wait for another quarter? We don't know. If you have the surplus money and if you need the cash flow, which is of the higher interest rate than what they were in the last quarter, then please invest your money now. This is a good time. And if you look at the senior citizen savings rate, it hasn't been 7.6% in last 1.5 years. So I think it's a good time to put your money back into these products where the interest rates have gone up. Watch out for the products where the interest rates have not been changed at all. PPF, Sukanya Samriddhi, there is no change at all in these two products. So look at only those products where the interest rates have gone up by 20 to 30 pips.
Yeah, exactly. So, Anand, but then PPF and Sukanya Samriddhi Yojana, don't you think in terms of popularity, these schemes are really known, and in fact, a rate hike over year, interest rate hike over year would have been really taken well?
Absolutely right. Even where we have seen some interest rate hike, I feel that there is a lot of more scope. Lending rates, if we factor in today rate hike as well, has been to the tune of 190 bips. Loans have increased to the tune of 1% plus. And when we talk about investment, we are seeing increase of 10 to 30 bips. I feel that there is still a lot of scope. Especially Sukanya Samriddhi scheme, I personally feel that there is scope of rate hikes and we should see some rate hikes in coming times.
All right, but then now this is just the beginning. Amit, we are going to look at more interest rate hikes over here, talking about a conservative approach. What kind of an investor should be looking at small savings schemes? Should we also keep an eye on raising fixed deposit rates? A lot of debt in your portfolio can give you good amount of money and good returns.
Yeah, Kavita, this is a very recurring debate that I often get into. Should we put the money in deposits or government-backed products, or should we put the money in debt funds? Look, anytime you have a guaranteed interest rate, there is a guaranteed tax rate. Anytime you have a variable interest rate coming in your portfolio through debt funds, you have a variable tax rate, right? So you get the advantage of capital gains, you get the advantage of lower capital gains taxes. So have a careful look. If you are in a nice income tax bracket where the money earned through interest is not crossing the threshold of higher taxes, put your money into higher interest rate products like these that we just talked about. But if you are in a 30 plus tax bracket, and if you are seeing that your interest is going to go incomes are going to go beyond 20, 30, 40 lakhs, then debt funds is a better choice. Also, please keep a watch. If you are earning an income which is more than 50 lakhs, then you are also attracting 10% surcharge on the on your tax liability. So if you want to stay safe and if you want to make sure that the capital gains income is more and interest income is less, then go for more tax efficient products, and debt funds with AAA rated underlying securities qualify, in my opinion, as a more tax efficient products than these products which are probably sounding a higher interest rate and hence a better product, but you have to look at the number which is post-tax number. So keep a lookout for the post-tax number that you're making through your investments.
An important criteria for selecting these kind of investment instrument. But then, Anant, a lot of times viewers keep asking me that when you talk about fixed deposit, should we be going for a bank fixed deposit or corporate fixed deposit? Now, what are the parameters on which you should be deciding whether to go for a bank FD or a corporate FD?
See, in debt, firstly, we have to understand that taking a incremental risk can be really brutal for our portfolio, because when we take risk in debt, returns are not directly proportional. Return on capital is more important than return of capital. So what we have to ensure is that we are getting some return, also some good amount of interest, plus we are getting our capital also on time. So this is a very important criteria when we select debt funds. I personally prefer investing in bank FDs as compared to corporate FDs, because the risk out there is bit on the higher side. And if at all we want to have some risky assets, debt funds or debt mutual funds can be a better choice, because there we will have a fund manager who will be looking at our portfolio. We will be having mix of more than 30 plus asset class, 30 different borrowers to whom we have lended our money. So that can be a better approach, especially if you want to go after risky debt funds.
All right, so this was all about small saving schemes and your investment in fixed instrument. But then let's talk about card tokenization, Amit, which is going to roll out from 1st October. Merchants and tech firms have already flagged concerns about this. But then now, since this is being rolled out, what does it mean for a credit card or a debit card owner?
It's a very good news, Kavita. I think we are really evolving as a nation. We are becoming very modern. We have the best IT capital and IT intellectual prowess in the country. And the fact that we are getting into the tokenization era starting tomorrow is a fantastic news. What it does, it basically tokenizes your card details. So the card detail that you used to upload while making a transaction through Amazon or through Flipkart or through Zomato or through Swiggy, all those card details will now be tokenized. And since the card detail is tokenized and the merchant is now keeping your tokenized card, the card tokenized form, even if it gets stolen, it is safe because the hacker will not be able to decrypt the card details from that tokenized card. It means enhanced security. It also means a lot of safety. It also means people who are not very tech savvy. Look at our senior citizens. These guys, poor guys, they've just started using mobile phones and they end up inadvertently storing these details, which are very sensitive to their financial information. And once that information is tokenized, it's not going to be easy to steal the money from their accounts. So it will create an additional layer of security in our senior citizens. It will also create an additional layer of transactional interchanges between the buyer and the seller. And the best of all is it's going to be very, very difficult for people who are thriving in the hacking and cyber theft space to crack the details of these cards and do fraudulent transactions.
The consumer data protection, that seems to be the priority and the main reason behind tokenization. Unfortunately, my time is up over here and we will have to really end this discussion. Thank you so much, Anant and Amit, for making time and helping our viewers plan their finances.